Hello everyone, it's Alex Suslov, Head of Capital Markets at AD Mortgage, and Billy Abrams, CEO of ADM Securities, here with you for our weekly AD Digest. Hello Billy.
Hello everybody, hello Alex.
Today we see Freddie 30-year fixed rates at 5.8%. Non-QM rates are at 7.7%. I think every week we're moving another 10 to 20 basis points, especially after the last Fed hike and market realizing that inflation is not where everyone is expected it is, right?
That's
Especially
right.
Oil prices are up again, even though we see some correction today. Gas prices are crazy high. I've seen a lot of memes and pictures with prices going as high as $8 per gallon or so. This is crazy. Fed has indicated they're obviously looking at the full CPI number, even though we have PCE numbers go out next week, which we'll be looking for. I want to mention also that comparing to 30-year fixed rate for Freddie Mac, ARM loans are still at 4.5%, which may be a good option for borrowers to go with ARM loans and expect a reset in 5 years to a better rate. Billy, what are we looking at right now? We see that market has rebounded a little bit. Rates went down about 20 to 30 basis points past week. Do you think it's a correction and we're ahead of a sell-off, or that's what the market is expecting today?
Alex, the way I see it, first of all, the rates 2 weeks ago was the three-quarter point or 75 basis point rate hike. The markets crested in terms of yield the day before that, so they had factored that into the market. I think what the markets have been doing is pricing in all the Fed rate hikes out a year, basically. But what came out of the meeting, the FOMC meeting 2 weeks ago, and then out of testimony that Chairman Powell gave before Congress last week, is that out of his mouth, he can't rule out a recession. I don't think anyone should have been ruling that out, but it seems like the markets didn't consider it. So we got the high yields the day before the FOMC meeting. In the next 6 days, the 5-year rallied more than it has at any time in the last 2 years. Ever since it was yielding 19 beeps in August of 2020, we got a 55 basis point rally. It's given back a little in the last couple days. But that's a great start. In my opinion, clearly a corrective move. I believe before this entire run-up in yields is over, this particular cycle, I think there'll be a multi-month correction. I don't know if this is it or not. I think we're close to it. I think we're close to the end of the move up in yields. But it's a little bit too early to know if this is a speed bump on the way to higher yields or the beginning of a bigger correction. I think we'll find that out soon enough. And I think we'll head into next week with numbers like PCE, durable goods, final GDP. And the markets will probably start to respond to economic numbers like that more than they have in the past. And I think we're probably about to enter more of a two-way street as opposed to just higher rates, higher rates, higher rates. So.
I see. In non-QM space, in the meantime, Billy, I see that everyone is playing still, looking at the market and considering the expectations that may be given to us by Federal Reserve. We are, among our latest developments, I want to remind everyone we are accepting small balance commercial loans up to 80 units, multifamily properties. We're looking into IT borrowers, accepting those on our non-QM program. And we've had a lot of questions on our asset utilization program and using cryptocurrencies to qualify with income derived from cryptocurrencies and using cryptocurrencies for reserves and liquidating those funds to use those for down payment and closing costs.
Okay.
We'll have a webinar on that to talk more and give more details to our brokers on how that works and how their borrowers can benefit using their crypto assets. Aside from that, on June 28th, we'll have a webinar on prepayment penalties, and we'll talk on the opportunities to get a better rate and how that may benefit and what are the disadvantages of having prepayment penalty for a borrower in the current environment. And July 5th, we'll be talking about different options among our non-chem products for millennial home buyers these days. There are plenty of opportunities, and we see a lot of people below 40s acquiring new homes, acquiring investment properties. So we'd like to share some interesting opportunities that they can find with our non-chem programs.
That crude oil, the current contract, futures contract, made its life a contract high about, I don't know, a week and a half ago, something like that. And it sold off $7 or $8 that day from the high. So it left an outside, what's called an outside reversal, traded from above the previous day's high to below the previous day's low. And then a few days later, it did it again. It didn't make a new contract high, but it had a second outside down reversal. And then it finished the week with an outside weekly reversal. It could just, that sort of could be coincidental, or those could be back-to-back clues that there's a bigger bounce in here than we think. I don't question that we're going to see higher oil prices down the road necessarily, but basis the longer term picture, the weekly chart, it looks as though we could bounce this thing back into the 80s or 90s. Crude oil now trading at about 106 or 7 or something like that. So maybe we get a little relief at the pumps that we're not expecting. Probably not a long-term one, but we probably get something.
Thank you, Billy. Thank you, everyone. It was Billy Abrams, CEO of ADM Securities, and myself, Alex Suslov, Head of Capital Markets at AD Mortgage. Stay tuned.
Thank you, everybody. We'll see you next week.
Thanks.